is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 4th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that it should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out with the bulls and the bears what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon, 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have a flat market. The Dow is trading up 6 points at 20,656. S&P is off 3. NASDAQ down 7. NASDAQ Composite off 10. The Russell's off 4 points, 0.3% to the downside. It's the semiconductor indice that is off 0.8%. So the leader to the downside, that's $8. Gold's up 4, silver's up 0.6% or 11 pennies. Light sweet crude is up 1 7/10%. It's trading out at 51.11, trying to tackle its TAS weekly profile high. We'll go take a look at that. Leading the charge here to the upside, it is Peabody Energy. It's got the energy in the market. What? Up 1,258%. Must be some type of buyout that I didn't really take a look at. My apology for that. What is that? What the Sam heck is this out here? I don't know. I've got an error that just popped up on my screen. Amazon, though, that's a true deal. That's up $13 and change, trading out at $9.05. You've got General Communications Corp. That's up 62% or 12%. Paratech Pharmaceuticals up 5. Liberty Interactive up 4. Transdigim Group up 4. To the downside, you've got Acuity Brands. AYI is the ticker symbol. That's down $28. NetEase is off $11. Priceline down 8. Corvus Pharmaceuticals off 8. FleetCor Technology down 7. NVIDIA down about $7. But I want to look at whatever it is you want to look at. And at this stage here, I don't have any emails or requests out here. So let's just go take a look at the Dow, which is up $5 right now. So what is going on inside of the Dow? You know, if we look at the daily chart as an example here, let's just blow this up on our screen. It's a very clear, well, it's clear to me on a daily perspective. We can see a little descending trend line that began back on March 1st. So you'll see a little red diagonal line if you're watching us on TigerTV. If you're not, the top of the March 1st date begins our trend line to the downside. In this case here, we're not identifying channels, just some trend lines. The next touch point is going to be March 16th. You'll see that for the following successive 4 days, that became the ceiling. So not until the Dow breaks through that trend line, it is in a downtrend. Now, not much of one. If we do take a look at the indicator at the very bottom panel of my chart out here, I always like to figure out when the market's not behaving the way that we would anticipate that it would, I always ask the question, what am I missing? And that means, something to think about. Now, if we take a look at what do I mean it's not behaving the way that we would anticipate it, well, in one sense, really the Dow, it's advanced decline oscillator reading, bottom panel, March 3rd went down below zero. With the exception of 2 trading sessions, it has been down below zero ever since. And basically, that means that you should anticipate that the market is going to continue to move southward. which in reality the Dow has. Not by any large stretch out here, but it has been moving to the south. So is it going to be moving to the south in any kind of large way out here? Well, then I said to myself, and was actually kind of spurred on right about the same time when Larry, I did get an email. I apologize. I did get an email from Larry asking about the volatility index, and he mentioned a 5-minute volatility index. And at the same time I got that email, I was saying, I really ought to just go take a look at the advanced decline oscillator reading on a weekly basis out here. Maybe I can see something there. Maybe I can see something inside the S&P 500, something that we ought to consider. So if we flip over here to the weekly charts for the Dow, its oscillator readings, as well as the S&P and the VIX volatility, the spot VIX index, by the way. If we come back here and take a look at the weekly reading inside of the Dow, let me just kind of blow this up here. You're going to see that the advanced decline oscillator reading, which is the difference between two exponential moving averages, 19 and 39, which are the ones that we like to use, because both you and I are rocket scientists, and that's why we use 19 and 39. There's more backstory behind that, but we don't need that backstory right at this moment. What you will see is that it's actually above zero from a weekly standpoint. When and or if, now it's just above zero. When and or if it gets below that zero line, well, that's when things could start rocking and rolling to the downside. As an example, we'll just go back a little bit in time out here. Just go back to May 18th. Remember when the Dow made a top in May, was May 18th, I believe, of 2015. Now, at that time, the advanced decline oscillator reading was below zero on a weekly basis out here. And it stayed below zero up until about the October 5th, the week that began October 5th out there. And we saw a fairly large decline, percentage-wise, inside of the Dow. That's what is needed to happen. You can see, in essence, not entirely, but when this advanced decline oscillator reading on a weekly perspective got above the zero line back on the week of February 8th, 2016, it's pretty much been off to the races. A couple of speed bumps along the way, back on June the 20th when that advanced decline information got below zero. Same on the 27th out here. But pretty much this thing has been riding above the zero line. That's why I'm thinking out loud here, we really haven't seen much damage. It says, hey, you know what, Steve-O? You probably ought to look at the weekly data as well to help answer the question out here. So it's close to zero. It ain't there yet. I would anticipate that if it does get below the zero line, well, that's when things start moving to the downside. Now, you and I take a look at the advanced decline data for two other indices out here. And the only reason is because it's the only data that I've got that gets updated, every second. I used to have access to all kinds of ETFs out there, but unfortunately, I don't have access to it. It's because it's not there. Actually, could be there if you just spent a small fortune. Not worth it. However, we take a look at the NASDAQ composite, a whole other story out there. We don't have time for those stories here. Well, it's not storytelling other than what the market is telling us. If we take a look at the NASDAQ composite panel number 2, well, you're going to see the reading on a weekly basis is at 27.87 as we speak right now. You'll see that change every second or so. That's above zero. The Dow already above zero. The New York Stock Exchange is above zero. And you know what? From a weekly perspective, Larry, with regard to the volatility index, until it probably breaks the 50-day, which is here in this case here, 50-week exponential moving average, going short may be tough. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, all I did was I converted those daily charts into weekly charts. That means the volatility index, the bottom portion of my screen out here, you're going to see a yellow line. And because it was left to 50, now you're talking 50 weeks, 250 days out here. But one thing that you certainly can see, in this case, you can go back all the way into the 2007 time frame. And, you and I like to use the 50-day. It usually works pretty well. I would have to say for the last couple of months, it ain't been working too well out here. But we can see, so now we up the ante to raise you to 250 out here. We can see that you go back into the 2007 time frame when the market was making its top out here, how, in fact, the volatility index was able to stay above that line, and we saw the market in essence get crushed. And every time that price is above that level, well, we've seen certainly some type of sell-off. This week here, last week I should say, and this week, but last week we saw the volatility index try to poke its head above that level. By the way, the number right now today is 1346. The high today, 1359. So again, it was tackled, but so far a fumble. But I would say this, in paying attention to that line and paying attention to the weekly advanced decline data, these may be some key areas for you and I to monitor. 1347 again as we speak right now. So that's my thinking on what's going on inside of the indices. Now, with regard to the Dow itself out here, or just the markets, for those of you that tried to jump in on the short side this morning because you just said, hey, this is great, markets are moving lower after yesterday, ready to resume their move lower out here, you would have been ignoring the pattern, beautiful pattern here on the 30-minute chart with price moving lower, doing less relative energy, and finally forming a bullish reversal signal. Now, my newsletter was set out right around 8 or so. 8:30 was when this actually formed a hammer candle out here inside of the NQ. When you see that bullish reversal signal form at one of these completed patterns out here, it says, hey, my bottom is in. No different than the top that came in yesterday at about 10 o'clock in the morning. Prices moving higher, doing less relative energy out here. So the same kind of a setup inside the market at the top. Same thing at the bottom. All price did during this half-hour period between 1 and right now it's a 120 was come back and test Stevie's red line. That's that oscillator and change line. If prices had gotten below that, we would have had a falling price oscillator below zero. We don't have that. Instead, we have a rising price oscillator below zero. Says more counter trend rally can unfold. In the case of the NQ, I would anticipate 54.3675 is its next target. You get above that, then the next target becomes a higher level out there. So that's what was going on. That's why you want to make sure that if you are trading, especially if you're an intraday trader, I don't say you have to trade the equity futures, but my goodness, if you don't get access to them and understand and utilize these patterns out here, you are trading the market with both hands tied behind your back. Don't do it. Just don't do it out there. In the case, we had the same thing go on yesterday with regard to the gold contract out here. What was it that we were looking at? Oh, yeah. Out here, we had seen this nice little bottom that put in on March 31st. This is what clients and I yesterday were looking at, yesterday morning. So we saw that same type of bottom pattern out here. When the newsletter got out, we said, hey, looks to me like there's an A to B equals CD pattern that is setting up with the price target at 1257 level. Voila. That's, in fact, what unfolded. Price went ahead and moved higher, right? So price went ahead and moved higher. Again, we're just looking at a 30-minute chart. These patterns, they repeat over and over and over again on all different time frames. When price made its high inside of Goldilocks earlier this morning at about 8:30, same time period, you had price moving higher, doing less relative energy, and you had the cavalry, the bearish cavalry, by the way, that showed up. The steamroller baby showed a nice little dark cloud cover, a key reversal session, the whole 9 yards. Now, price moved back to the first level of support, and that is Stevie's dashed red line. It's not really mine. It's taken from Tom DeMark's system, one of his TDST levels out there. And we saw a nice little hammer candle form. So if gold is going to continue to move higher, first it needs to elevate itself and get above my real red line out there, and that's at 1259.60. If it closes below the hammer candle from 10 o'clock this morning, well, that's not a good thing. That price level, by the way, I believe is at 1256. So watch the 1256 level. Is that right? Yeah, I guess it's 1256. You're 1257.60 as we speak right now. Why? Because you get below that, then you have an A to B equals CD to the downside in Goldilocks. It would look like, or potentially look like, because we won't know until that swing gets taken out, about 1252, probably 1250 or so to the downside. But right now we have a little bit of a tug of war going on. I don't know which way this is going to end. Since I don't know which way this is going to end, that means, hey, what does the yen have to say about it? Because it doesn't really care what I say. It only cares about, I believe it cares about, hey, what is the yen doing out here? So let's go take a look at the U.S. dollar, Japanese yen currency pair. And, well, here's what we can see on it. This morning's push lower found support, in essence, where it should have, right in the 110.39 to 110.11. You might say, why there? And we would say, well, courtesy of John Logan, who created these little tabs. Well, he took the work of Stottlemyre and created something that was better. That's what each of us do, right? That's why we don't use the same light bulb today that was invented all those years ago. We don't use the same technical, with regard to technical tools, we do use a lot of the same tools that were created many years ago, back in the 50s, because they still are beauts. They really work well. In this case here, we can see that price got down into support. So the next key level, in order for gold, silver to really move higher, is we need to see the Japanese yen crack the 110.39 level. Otherwise, it could be sideways-ish type of movement out here. Not really a problem for gold, not unless you were to see it close back above 111.67. Then that could be, we'll use the word problematic out here. But otherwise, price found support inside the yen. We saw that gold found resistance, just making one of those same types of patterns that help us identify. Hey, I caught my cousin Vinny 2 nights ago. How much fun was that? You got to love, and I just happened to turn on the TV and then the channel, and voila, there it was, nearly from the beginning. It was late at night. Now, late at night for me is a little bit different than late at night for you, but it was impossible to actually turn it off. In fact, I didn't turn it off. There are just too many good scenes, too many good scenes, too many good things inside that movie. And you got to admit, laughing is a good thing. Yeah, at least I think it's a good thing. Okay, so no more laughing out here. No, I'm just kidding. We should laugh. So we've looked at the market. I've kind of sized up for you the market, I believe, what it's doing. I mean, you guys got to feed me with some questions out here. Tell me what you need, whether it's market profile information, whatever it might be. Hey, light sweet crude. Let's go take a look at light sweet crude out here. Yeah, especially his girlfriend, Duffy, Marissa Tomei, huh? Yeah. In any event, she's great in that movie. And many other movies. So if we take a look at light sweet crude, it's pretty much done. Toast history. Adios, amigos. I'm just kidding. What it has done, Tomei. I'm sorry. What did I say? Tomei out there. But if we take a look at light sweet crude, it's got a little hurdle out here. 51.16 is the number. That happens to be its TAS weekly market profile high. If it can clear that, and then it's curtains for the bears, because light sweet crude will run higher, probably all the way up to where it really began moving lower back on March 8th, say about 53.43. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So for Danny, is it Danny? Sorry, I accidentally shut down. Danny in Atlanta wanted to take a look at November soybeans out here. So, Danny, here's what I can provide to you for that. And let's just go take a look at the market profiles for the 4 primary time frames, right, that we track. 60-minute, that's the left-hand panel. Next to that, the 4-hour chart of 240. Next to that, the daily. And then to the very right is the weekly. And so as we take a look at this, you'll see all kinds of colored line bars out here. The red ones in this case here utilizing using John Logan's system out here. Yeah, they're pretty much saying that's in a sell type of mode, stealing from Basil out here with regard to modes out here. And if we take as far as colors of bars, so you can see pretty much across the board here, that's what its message is. 60 minutes says it's got to get above 950 and 2/10 out there in order to get back to some type of potential bullish move up to the 953 area. On the 2-hour and 40-minute chart, 240-minute chart out here, not 2-hour and 40-minute, 240-minute chart out here, you're down below its bottom of its box, right around 940, right around 950 it looks like, way below any type of daily box out here, and well below anything on the weekly chart. So, Danny, I don't know if there's anything else that you need, and if there is, go ahead and post that in a den, and be happy to look at it someplace else, some other chart. But basically, if you're looking for a bottom, I would pay attention to the 30-minute chart, 30-minute profile. Go ahead and explode that up for you, and because if it can get back inside its box, the profile itself has a bullish type structure, and then it ought to get into that 953 type area out there. So thanks for asking. I accidentally shut the den off during that breakout there, so let me go check email, see if anybody has sent in any requests out there. I suppose there's probably somebody who's thinking, hey, could you go take a look at the miners for us, which I'll be happy to do. I just want to see if anybody sent in any other requests out here. My apologies for not being with you. Yeah, Tom. Okay, Tom wants to take a look at Nugget and J-Nug, so we can do that. For not being able to be with you on Friday, and yesterday, Friday was a heck of a day, especially when you're in trades and your internet connection goes down, and you call the company and they say, yeah, we should have things up by 4:30. Yeah, that was not exactly what I wanted to hear out there in any event. So let's go take a look at, for Tom, let's go take a look at Nugget, J-Nug. Although I think, Tom, that you and I covered in essence what's going on with gold out here, and taking a look at what's going on with regard to the yen. So there's not a whole lot more that we need. But if we do go take a look at, let's start off by looking at the GDX. And in this case here, let's just go take a look at some swing point information. So in the case of the GDX, it's very clear. Even though you and I weren't here on Friday and Saturday together, nothing has changed. Friday and Saturday, Friday and Monday together, nothing's changed here, right? You've got first of all, with regard to trading those triples, only for an intraday trader, which I know Tom is very much an intraday trader, then you want to do it. Otherwise, don't be thinking of taking either of those vehicles for a long-term test drive out here, because this is a choppy sideways consolidation market. In the case of the GDX, which is between 2256 at the bottom and 2339 at the top. You're closing, you're 2361, my apology, 2361. You're trading at 2339. So you're headed to that 2361 level. Last time that price was up here was March 27th. There was volume. I say there was volume, but it doesn't show on my screen. That means we need to go turn it on. There we go. So the volume back then on that trading day was 61 million shares. Tom, you're up with 21.7 million shares. That is what we call in the business light volume. So it doesn't look like it's going anywhere real quick out there. All bets are off if the yen can take out that bottom of its daily box profile that began, I think, over the course of the last couple of trading sessions out here. So with regard to the Nugget, let's just go put that up here, NUGT. I don't know if it's going to show the exact same sideways movement between profiles. That's why I would, it really doesn't. And so I would be focused, shows a sideways move, but doesn't really show the floor and the ceiling as well as the GDX does. If we type in JNUG out here, and if you're trading those vehicles, then my suggestion is to go ahead and make sure that you're paying attention to the intraday time frames in something like gold. Because utilizing these tools, these price relative strength divergent patterns, these A to B equals CD patterns, Stevie's red line, the oscillator and change line, or just simply the price oscillator, understanding where price is in relation to that. These are going to be excellent tools to assist you in the intraday trades out there. If you were long, for example, those triples coming in at 10 or 8:30 this morning, certainly by 9 o'clock, and you had the bearish reversal signal, you had price go ahead and dip down below Stevie's red line out here. It was telling you time to go ahead and take your profits inside of those. And, you can put this on any time frame you want. You'll find different patterns. If we go put it on a 10-minute chart, of course, you want to stay within those charts out there, those time frames, in order to go ahead and trade. Here you can see same type of pattern on a 10-minute chart, price getting stretched, bearish reversal signal moving down, forming a bit of a bottom here with that hammer candle. So we've got a hammer candles on a 10-minute, on a 30-minute basis. It tells us that 1256 is a very key level out here, and that is in the case of the current gold contract, the June gold contract. So Tomas, thanks for sending an email. I hope that assists you with your trading. It says you're long the JNUG and the Nugget from last week. So, so what do you do? Let me just open it up and see here. Yeah, so you're talking about other currency pairs as well. You're talking about the dollar. You're talking about the euro. What I always like to do, Tom, is so when you're asking a question, I like to first pop open this chart, which is, let's go see if I can find it, which is the yen gold 10-minute bar correlation, right? So I always like to look at this. Whoa, I guess you actually have to change the contract on it, otherwise, you're not going to get a lot of gibberish. We don't like gibberish around here, even though sometimes I probably give you a little gibberish. So here's our 10-minute charts, and yeah, we can see that this correlation, Tom, with regard to the yen currency pair and gold. I mean, it's evident, it's out here. It ain't exact. But it's close enough to being, somewhat exacting out here. So I think you pay attention. It's on a 10-minute basis, by the way. What you don't want to see the yen. Now I've got the yen futures out here. And that way, because I've got a 10-minute delay on the currency pair, believe it or not, no delay on the futures contract because I pay those prices out here. So right now, gold on a 10-minute basis, Tom, is trying to close above an important market profile. It's high, the top of the box, 1258.90. You can see since it formed that high earlier this morning about 8:30, you've seen new boxes form. You've not seen resistance been taken out. And if you can see it close above 1258.90, that would be a positive for you. Otherwise, you want to watch the bottom of the box, 1256.80. You get below that, that's a problem. In the case of the yen, it's trying to do the same thing. Yen futures, you'd like to see this get above 0.90638. That would be a positive too. So everything really working in sync here. But what do you do with those trades? We kind of covered it. You're in a range out there inside the GDX. It's not going to help those triples. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Still talking Goldilocks here. The chart that I have on my screen, the top portion is gold priced in U.S. dollars. Line charts that we're using, so it's only showing the closing of the closing price as of that day. Sometimes it's clear to take a look at it that way, especially when I'm looking at trend lines. And I don't have to worry about, I'm looking at I've always said, maintained. I have maintained consistently. The body of the candle is the essence of price. Well, I believe the same should be said with regard to utilizing a line chart. In fact, using the body of the candle, right, the closing price. Now, when you're doing channeling out here, then you really want to look at the entire body of the candle, the open and the close, and just kind of disregard the upper and lower shadows or wicks, whatever it is you want to refer to them. But one of the Denners posted a article, and I didn't get a chance to really read the article that much. I popped it open, then the show started and so forth. But it was talking about it was pretty negative on gold. I think it was the one thing that I did read on there. And we each have our opinions on it. Here's what I say the charts are communicating to you and I with regard to it. One thing I read in that article, or I thought, again, I didn't read the entire article, so I don't have the proper intent of it, but it did make mention that gold has not performed as well in 2016 as it did as it has in 2017 as it did in 2016. I'll eventually get it out. And I suppose that's probably true in relative terms. Maybe your relatives, I don't know, but relative as to maybe a price. But wait a minute here. Actually, it's doing the exact same kind of thing out here. If you're watching the top portion of my screen, that's gold priced in U.S. dollars. Back in 2016, nice move off of the bottom, right? December of 2015, nice move. Ran right into resistance of a descending trend line that took us back into 2014. That's that red diagonal line. Price broke above it. Moved from basically 12.15 into the 13.50, 13.60 type area, right? Then fast forward to this year. Where are we? Forms another nice little descending trend line, okay? Helps us to form a rising bottoms. It was just last week that we saw gold go ahead and break through this trend line. actually looks like it's poised to do the same thing. It doesn't tell us when. It doesn't say, hey, I'm going to do it on April 4th or 5th out there. But it does look at this stage here, I would venture to say the person who wrote that article maybe should take a look at this out here. It has had meaning in the past out there. And quite frankly, gold priced in euros even has more meaning. That's the bottom portion of my chart. That broke through its descending trend line back in February. Now, what does this mean? Where is gold headed to? Well, logically, it should head all the way back to the previous highs from 2016, which is then going to get it very close to the longer-term downtrend line, the one that takes us back to 2011 at its high, and then uses, in essence, as the next touch point, the 2012 area. That takes us into today right around 1420 or so, but over time that number will come down because the trend line goes from upper left to lower right. But it does look to me like over time that's where gold wants to hit. And goodness gracious, if that line gets broken through, then it's really off to the races out here. So maybe a bit of frustration and back and forth. But I have to tell you right now, the long-term picture, this could change tomorrow, but we just have to go with what does it look like at 1:45 in the afternoon on April the 4th. And really, this is just following a similar pattern to what it did back in 2016 when it broke a trend line. In fact, in this case here, it broke it. It came back and tested it last week on Thursday and Friday, March 29th, 30th, so Thursday, Friday, Wednesday, Thursday, Friday time frame. That alone is kind of a nice little bullish signal out there. So that's what's going on with Goldilocks. But do I suggest that you hold on to triple ETFs at no, I don't. Not until you start to really get a pop in a trend out there. Otherwise, just hold on to the GDX. It'll be much easier ride while it basically does pretty much nothing. Okay, what else do we want to take a look at? I don't see any other requests out there. If there are in the den, would you please repost it? Because when I turned the system off accidentally, what was I thinking? Clearly, I think I lost whatever request might have been put in there out there. So just checking the old emails here. Do we have a caller? We do have a caller. That makes it even easier. Let's go to Tim in Palm Harbor. Tim, thanks for calling. Thanks for holding. How are you doing today?
I'm doing good. How are you?
I'm doing excellent. Thanks so much for asking. And you are interested in Symantec Corp. Why don't you tell the listeners what you're doing and how we can help you?
It looks like it's formed a base, and it's well above its 50-day moving average. And I think with all the talk about cybersecurity and everything these days, that it might be a possible either a takeover target or a possible short-term buy or mid-term buy. And I'm not in it right now. I just looked like it was been basing for a few days, quite a few days.
Do you have an area where you're looking then to be able to get into it at? What's your thoughts? So you've identified this base. Are you going to try to buy the bottom of the base, or is there? Give me an idea for where you're looking at, where you're targeting for an entry price in this.
Well, I was wondering about $30. It's at $30.24 right now, $30.33 or something.
Okay.
So I was thinking that's like the bottom of the basing area, I guess.
Yeah, and what you're looking at, folks, what he's looking at is the March 27th swing point, which was 7.2 million shares. The prior time that was down in that level was 6.2 million shares on March 21st. So in one sense, it really tested your 30 level, 29.95, with a bit too much volume. So at least let it get down there, I would say, and test that area. Another place, another spot maybe to look, if it'll get back there, would be about 29.35. Maybe we're splitting hairs there. Maybe use a wide enough stop that something like that wouldn't matter. You're trying to build a position out here. At this stage, when I take a look at a daily chart, for example, here's what I know. Here's what we both know, and that is that price has been trading below its oscillator unchanged line. That's the red line, Tim, that is on my chart out here. And when price is below that, that tells me that the difference between its 19 and 39-day moving average is starting to fall. And when it starts to fall, it says, hey, I'm basically nearly in retracement mode. And if I were to take a look at this chart and not take a look at market profiles, this would say that price would be pulling back into the March 6th area. That's what you would be looking for as we speak right now today, around the $28 mark. If I take a look at market profiles, I don't see that same message out here. So maybe you want to start building a position in this. If I look at the weekly time frame chart, let me see what this shows on a weekly. What you'd like to see, Tim, is some type of maybe confirmed A to B equals CD pattern. And in the case of Symantec, I would be focusing on the October 3rd week, which had 30 million shares. And if we see when that was passed, if that was passed with more volume, that would be a nice thing. It wasn't. It was passed with only 21 million shares versus the 30. And I'm looking at the week of January 9th. Even the following week was 29 million shares. So, it hasn't exactly had the oomph. That doesn't mean it can't go ahead and complete it. But, I'm going to look at, for example, we don't do this often enough, just an expansion of swing points for you, which takes me back to the week of January in 2015 down to the February 2016 area. And it's really sitting right at about the 1.272 expansion level. Wait for a pullback, and then hopefully you can get $34 out of it. All right?
Okay. All right. Well, I appreciate it.
You bet. Thanks for calling. That was Tim in Palm Harbor, and that was ticker symbol SYMC, Symantec Corp. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So as we kind of summarize what we are looking at here, we began the show by looking at a couple different things. But one of the charts we looked at was the NQ 30-minute time frame chart out here. What you and I noticed, two of our topping/bottoming patterns out here. In this case, we're looking at the bottoming pattern, price moving lower, doing less relative energy. That's why when you wake up, you take a look at the futures market. If you're short, you might get all giddy. If you're not short, you might say, geez, I ought to jump on that train. And then you start taking a look at it and you say, well, where are we at in our wave pattern? Is price moving higher or lower, doing less or more energy out there? And in this case here, we're saying, hey, you got to be cautious. Not time to jump on that train out here. And sure enough, two hammer candles formed, quite frankly, back to back over a 1 hour time period. That's a pretty big signal that where the buyers are hanging out. In fact, yesterday's low was another big hammer candle at that price area inside of the NQ. There could not be clearer signals where the buyers are. Now, the importance there is, hey, do they ever go out and party? Is it their weekend? Do they ever flee? Does price ever get below those hammer candles? Because if you do close below the low of a hammer candle, if you're long, you're wrong. You know that expression. Now, what the heck does that mean as we move to the upside out here? Well, blocking and tackling 54, 36, 75 is going to be a key area to watch and observe. Other areas, brand new information just arrived. Let's do the old CNN breaking news. Could they possibly have more breaking news that isn't breaking out there? But here at TFNN, we actually do have some breaking news to share with you, and that is a brand new daily market profile that has formed. Now, let's take a look at it. Let's go ahead and turn off the weekly numbers. Those are the green lines out here. We can always add them back, but right now we're going to undecorate that. By the way, the top of the box, 54.41. That's a level you want to be paying attention to on the weekly, because if it closes above that, you're going to see a move not much higher, but higher would be to 54.55 out there. 54.55. Now let's go ahead. Why do I say 54.55, even though it's only about 11 points higher? Well, because it's the top of the daily box out here. Now, this box has formed a lower low as well as a higher high out there. It would have been much easier if it had just formed a higher low and a higher high. Then we could have said clearly, unequivocally, hey, here's the deal. Well, here's what we do know. Where's the next sell point inside the NQ? 54.55. Why do we say that? Well, because the structure of this box is clearly set up, well, like the last box, by the way. The structure of that box was also a structure of sellers, meaning price should have been able to explore the bottom of the box other than just on one day. In this case here, it would be 53.31. But that point of control, the center of the box, much closer to the top of the box out here, 54.55. That should be a ceiling. That should be the lid. That should be the extent of a move higher inside of the NQ if that price relative strength divergent pattern plays out like it really ought to and move to higher ground. Now, it may not do it between now and 4 o'clock, but there's no reason that it can't do it between now and tomorrow morning at 8 o'clock in the morning out here. So watch the 54.55 level on any advance. And it is inside the NQ that really only has that new piece of information out here. The lid inside of the Dow probably is still 2660 or so. The lid inside of the ES Mini, it's probably the high of a couple of days ago, but it is back inside. Is it back inside 2350? Yeah, it's back inside its daily box. It's struggling out here. So that, folks, that's all the info that I have. But I know someone that has even more info, even better info. In fact, it's a group of people. It's called David White, or he's called David White, our favorite polar bear. He's on from 3 to 4, 2 to 3. And then from 3 to 5, we've got the Tom O'Brien Show. And then Andy Heck from 5 to 6. So we've got your back here. Thanks so much for joining me today. We'll see you tomorrow on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.